All right. Looks like Kim is here and joined us.
Right on time.
All right. And Jon is here. So we're just going to give everyone another minute or two as people still, trickle in. We still see the number of participants still rising. So we'll give it another minute or two. While we wait, just want to let everyone know who's unrelated to East Coast Capital or is not familiar with our company. East Coast Capital is a mortgage lender licensed in over 40 states, and NMLS number 1403. Should you need any of our licensing information, it's available at nmlsconsumerconnect.com. Um, we are a lender that is focused on flexible financing for all of our borrowers, for all situations, whether it's purchase or refinance, regardless of what your need is, whether you're a simple W-2 worker looking to buy a first home, or if you're self-employed and not showing a ton of income on your W-2 for tax purposes. We have ways to accommodate everyone's needs and work with everyone to make sure that they're getting the financing that they need. So that's a little bit about East Coast Capital. And you'll learn more about our company and what we're doing, and specifically Jon Yellon in just a few minutes when he introduces himself. But we're going to give everyone just another minute just to, again, still see people trickling in. So just give them a moment and then we'll get started. All right. So on the call today, we have Jon Yellon with East Coast Capital, based out of South Carolina, one of our top loan producers and really customer extraordinaire, finding creative ways to get financing available to all of his employees. And one of his very valuable and successful real estate partners, Kim McElman, with Harbour Home Real Estate. Kim, why don't you take a moment, introduce yourself, and then Jon, you could do the same.
Hi, everyone. Thanks for joining. My name is Kim McElman. I am privileged to live on Hilton Head Island, a little paradise that we found in South Carolina. And I work in the real estate market here and have had a lot of success working from Savannah to Charleston, but primarily in the Hilton Head Bluffton area. And I basically help people navigate the transition moving from the north, whether it's Michigan or New York, Connecticut. There's a big flow that's coming to this area. We are advantageous property taxes and just all kinds of good ways that you can have a second home. Or I think, like Jon did, came down here to vacation and then said, "Hey, this is a great lifestyle. We're going to live here."
That's awesome. And Jon?
Yeah, thanks, Joe. Appreciate you putting this together for us. Yeah, I'm a transplant. I'm a Hilton Head resident. I go back and forth. Still have a lot of family, and I go up to New York quite a bit. 2020, it's a common story down here. Um, didn't know I was moving to Hilton Head. We just got out of town for COVID. My wife's from North Carolina. We used to vacation here. One thing led to another, and we never looked back. And I've really built a home for the family here. Kids go to school here, and it's been great. I've been in this mortgage business for 25 years, almost 25 years, and I guess at this point I'm willing to admit that it's my career, um, because it's just um, it's been a fun ride, a wild ride. You know, right now specifically is has been energizing. It's been really, coming out of really high interest rates after COVID. There was a quite a bit of a lull, and now I feel like it's just been really just a reinvigorated market, especially down here. I met Kim a little over a year ago, um, thanks to a friend of mine who I should throw a little mention out to Stephen Wood from Host and Home. He runs a great vacation rental company, and he always said, "You got to meet Kim. You got to meet Kim. You got to meet Kim." And then Kim gave me a shot, and I've learned just real quickly. I'll talk to Kim, early in the morning. She'll be in Savannah, and then I'll talk to her at noon, and she'll be like, "Oh, I'm in Charleston. I'm at a clothing showing of Charleston," and then she's back in Beaufort and Bluffton and Hilton Head and back around, and we go over our list, and it's just been a really great synergy. So I'm appreciative that we could take a minute to put all this together.
Yeah, awesome. Yeah,
Takes
looking
a
forward to getting
village.
started. Absolutely. So before we get started, I just want to let anyone know that if you have questions, please leave them in the chat. And towards the end of the discussion, we'll try to address as many questions as we can within the time that we've allotted. So John, I'm going to start things off with you. Being that you went to vacation and became the transplant, what do you notice are the major differences when it comes to buying a home in New York versus South Carolina?
So that's a great question. New York is where I still do a ton of business. It's where I did predominantly most of my business. And I never thought about it, just like when I would commute to the city every day, not thinking about it. This is just the way of life. And New York it's a great state to do business in, but I would say now I know for sure that it's the hardest state to do business in. Um, I would say the most significant differences are speed, meaning that in New York, you have a 30-page contract with an on or about closing date, which means that a buyer or seller could push out 30 days just because they want to, if it says on or about within the contract. And down here, I'll get a call from Kim and I'll say, she'll say, all right, we're heading the contract. We're closing in 3 weeks. And we do it. And it's typical. And 21 days, 30 days, no problem. Like that's the way it goes. I love the velocity of it. Closing costs in general. New York, as everybody knows, probably a lot of people on this call know, New York is just really expensive. New York State mortgage tax, mansion tax. South Carolina has none of that. It's actually the cheapest state in the country, from what I found, closing cost wise, one of them. And property taxes too. So when you're comparing, I mean, I won't even admit what I was paying in Westchester County before I moved to Hilton Head. And the last thing I would say, the main difference is just the vibe. In New York, you're handling a mortgage for somebody whose priorities first and foremost are really, um, proximity to employment, um, schools. There are good schools here too, but on Hilton Head and in this area, there's only a couple to choose from. In New York, you got to be within a certain school district, within a certain county, and when someone's buying a home here, the vibe is just it's like excitement because you're typically buying a beach house or something, some kind of nice getaway paradise type situation. And so it's just super positive vibes when you're talking to somebody because they're just really right off the gate, like thrilled. I mean, we handle primary residences here too. I'm getting into that a little bit more these days, but the vacation homes, the second, and the investment properties, there is just a different buzz about it versus
Sure.
New York.
Sure, absolutely. And Kim, you mentioned that John was one of those people that moved down. What continues to attract people to South Carolina? What's driving that demand? Why are they coming there?
I'll tell you, well, John mentioned one, the property taxes. I came from Chicago, not unlike New York, where
Sure.
it's crazy, the property taxes, and then you cannot really see where it goes. I think really here in South Carolina, it is the quality of life. We have, and actually in Hilton Head, over and over again, Condé Nast ranks us the #1 beach in the country. Me, myself, I was like, oh, well, that of course can't count Hawaii. Well, it does. And something unique about our area is we have a tidal that comes in twice a day. We have a great beach pack, and you can ride your bike uninterrupted on the beach 15 miles one way, and it's pretty phenomenal. We're also very protected. I'm not going to predict the weather, but typically our water is a little bit more shallow, and we're also tucked into this cove where Savannah is. And so the hurricanes don't hit us the way they hit Florida. Now, everybody knock on wood.
Knock on wood.
I was
Say
gonna
that
say.
something else will happen. But it affects our insurance. I mean, there's so many things for people to do and kids to do. Their heads aren't in the screens here. You can, if you love history, it's endless. I mean, this area was founded before the Revolutionary War. People find that hard to believe. Up in Port Royal, it's 1526 it was started.
Oh, wow.
Plymouth Rock has nothing on us. And so we have culture, we have restaurants. We're unique. It's not like deep into Alabama. We have a steady Hilton Head in this area was founded, really developed in the 80s and 90s. And so we get a lot of people from Ohio, Tennessee, Chicago, New York, Boston. Everything's like a 10 to 12-hour drive, right? So it's easy to get to. Or if you go to Florida, you're all the way down, you got another day's drive. You're going to break it up into two. So all of those things together, great restaurants, so you're not missing out. Luckily, Amazon's here, so shopping's at your door. And then, but you can be in the rivers and kayak, you can go to the beach, you can hike, you can join the book club, you can go to the symphony, you can have a 4-star dinner. I mean, you can have it all and not be in the rat race and then paying the high taxes.
Sure. It sounds amazing. I mean,
Shopping,
yep, go ahead, John.
shopping is at my door way too often from Amazon.
I'd hate to say it, mine also. I think a
It's
lot of
that
people
time
can
of year.
relate. Yeah, exactly. So yeah, I have to say, I've only been to Hilton Head a couple times myself, but every time I've gone, it's been amazing, and definitely can understand why someone would want to move down there. So are you finding, Kim, a lot of people are you going there for, primarily for their second homes? Are you seeing a change in demand because of let's say, the climates in, New York, Chicago, like yourself? Are you seeing more primary demand recently because of that?
I have a lot of primary demand. I mean, we
Really?
also have Paris Island. We have a big military base and the Marine
Sure.
Corps Air Station, so we get a lot of that. There's a lot of Gulfstream, BMW, Boeing. We have a lot of corporations that are investing in South Carolina, and a lot of jobs are made available here. Savannah, the great thing in Hilton Head is we have an airport that has United, American, and Delta. And so, yes, most of the time we have to connect, but in the summer when the demand is even higher, we can go nonstop to LaGuardia, Philly, Chicago, Dallas, and it's pretty incredible that you're 5 minutes from the airport and boom, off you go. But year round, everybody can travel in and out if they have to do that from work. Also for primary living, of course, COVID brought us work from home. Now that's shrunk a little, but a lot of people are like, okay, well, I can be in the office and commute back and forth once every 2 weeks or things like that, also increasing the demand. We have great schools, we have great universities, and I'm seeing a lot of full time. And as far as secondary homes, it's an education when they first come, but it's very easy here. I'm sure we'll talk about this moving on, but to make a real estate investment that can kind of carry itself.
Yeah, absolutely. And so let's talk a little bit more about that as far as the second homes. And John, this is going to be more for you. So when it comes to second homes, the financing for them, what are you seeing in the market that clients are dealing with?
Sure. So, yeah, I should also mention, I mean, emerging markets, not just Hilton Head, we're seeing there's so much construction going off island. So primary residence is finance wise,
Exploding.
when you get into that. Yeah, like when I get off island into a town called Bluffton, or as you move west towards 95, there's a couple of corridors there that have a lot of construction. Hilton Head is pretty much built up, and that's the way it is. But there's a few new projects here and there. But as far as financing goes on emerging markets, as we go west, it becomes pretty reasonably priced, especially when you compare it to up north. You have home sales in the 300 to 500, 600,000 range, depending on where you go, which direction. So I see a lot of government financing. I see for the first time home buyer thing, in new developments that are going up, and even retirement. Sun City, as you make your way out towards 95, it's a really popular retirement destination for borrowers. I'm still majority, I would say, is New York as far as primary goes. I am, getting some primary residence financing here, thanks to Kim quite a bit. And, but I've, my attitude when I came down here was that I really wanted to maintain what I had up there, and I didn't really want to come gangbusters out here. And it's always been organic. So when you get into second homes and investment property finance, you know, there's straightforward conventional financing, but then we also have, which is a courtesy to East Coast Capital, we underwrite and fund and underwrite directly in-house delegated non-QM products, which have been tremendous. DSCR lending for me has been like a major hot button. I wasn't here. I wasn't here 20 months ago, I think. And, from my travels and finally wound my way up here, which has been a blessing. It's opened up the non-QM, the self-employed bank statement, or the DSCR, especially the DSCR with investment property finance has been dramatic. But I'd say I'm seeing trend wise people being able to negotiate, buyers being able to negotiate more, where it was a little more like urgent, I got to make an offer, I got to, and it was more seller's market. But now, I mean, you still have those beautiful perfect homes that go the minute they go up, but that's not, that's not everything. There's so many other homes out there that there's room for negotiation. And I will say the craziest thing activity wise for me, I don't want to say that, like knock on wood thing. I don't want to say that this is back to the old days where I was just, pipeline massive and just going. But Q4 has been the best quarter by far. And here, we're going to close 29 loans this month, maybe, hopefully 27, 26. We'll see if a couple will get pushed over into January. Not yours, Kim. Yours are going to close in December.
They only close on time, Jon.
But like it's been really cool watching everything develop here a little more. I'm into the market. I really am. I'm energized about it.
That's great. So you mentioned DSCR. So real quick, just because there are some people that might not be familiar with that product, do you want to just tell us a little bit about what DSCR is and how that helps some buyers?
Yeah, I mean DSCRs for me, I love them. I mean because it's, if you're a buyer, um, you're really just focusing on the property and what it can generate from an income perspective. So that's the main criteria of the underwrite. And we don't need to look at your tax returns. We don't need to look at your W-2s. It's great to have great credit always, but we have some flexibility there. Um, you know, I would say another hot button for me is if you're an investor and you're getting into the market and you want to close with title in an LLC that you formed, we're fine with that. Like we have a great underwriting department that I can always count on, to help us work through deals and get things moving fast. And product wise, from a cash flow perspective, when somebody's buying an investment property, it's important that they analyze the rate of return on the property. It's a business, So essentially, if you're buying something near the beach and okay, like we have these market reports here. Kim and her colleagues over at Host and Home, they'll do an analysis, or they'll show what the home has been renting for, and you'll see, okay, this home brings in $200,000 a year. Let's divide that number by 12. Let's compare that to the monthly payment. As long as that jives and we're kind of 1-to-1, we're good to go. And we have some products. My favorite product that we have, I would say, DSCR wise, is the 30-year fixed with the interest only payment option. For me, if you explain the function of it, and a borrower, some borrowers get it right away. They understand it works like a HELOC. It's not a revolving, but it's a interest only payment that you can just make that payment, or you can add principal depending on the month. It's a great cash flow product. If you're having a great month, and you want to plug money back towards the principal and have it impact the monthly payment, great, you can do that. If it's a slow month and you just didn't rent out the house, maybe you're getting a little bit of forgiveness that month for interest. So
Sure.
that for me is hot button.
Yeah, from a investor perspective, the 30-year IO is really an incredible product for those looking to really grow their portfolio. And actually, Kim, I want to talk to you actually real briefly. I wanted to ask you about your experience with these products. What's been your experience with borrowers looking to purchase homes, whether it's a primary or secondary home? Have you had any recently any unique experiences with these properties or how we've been able to assist?
I'll tell you, one of the main reasons that I work with Jon and East Coast Capital is because they can get the job done. And I've brought very unique client situations to them, and we always can figure out a way to get it done. And partially because of the market that we offer is a little unique here. I would say let's just compare Florida and South Carolina quickly. South Carolina is a year-round market. Like in Florida, people aren't really renting in the summer, right? It's too hot unless you're going to the Orlando area. Here, all the snowbirds come down in the winter because we're a lot less expensive than Florida. And look, if it's 40 below in Detroit, you're really happy with 60 degrees in Hilton Head, okay? And then if you're for Florida, summer is our high season. So for a secondary home, when you want to be up in the Great Lakes or up in upstate New York, or you want to be at the Jersey Shore, perfect. Your property here can be rented and is making maximum dollars in the summer when you don't want to be here anyway. And that comes down to, I look at all the different products that you offer. You have the largest private portfolio lending opportunities of anybody I know. So I have someone that's can do online ministry. I can do someone that made $1 million in TikTok, but this is not really money that, a conventional bank is going to be attracted to. But here they can get Jon. We'll figure out a way to get it lended. They'll get into a house that'll carry itself, and boom, we're good. I had someone that bought a house, loved it, found another house they loved even more. They fixed this one up. We took a second on this house, paid for the other house. He made sure that we got rid of the prepay penalty, and boom. In fact, we just closed that house today. So it worked out very well. The client could be happier. And in the end, I have a fiduciary duty to protect my clients, and I really get an awesome result with Jon.
That's awesome. Yeah,
Or
the
I'm on the phone with him
non-QM.
right away.
That's awesome. Yeah,
Yeah,
Jon,
I have to just interject there for a second and just say, I've worked with a lot of people over the course of a really long time, and I think what makes this successful, a great part about Kim that makes her successful, is that she really takes the time to make sure that she understands exactly what we're providing for the client, and she takes the time to make sure that the client's first. The client understands everything, every detail. I mean, we go over a checklist each day of files that where are we this with that, how can we do this for that, can we she's super detail oriented as far as the transaction goes, where we closed the HELOC for somebody on Monday. That HELOC is funding in their primary residence in Ohio. That HELOC is funding tomorrow. The wire is going directly to Kim's attorney of choice, and that person is also closing on a DSCR purchase in Hilton Head the same day. And I didn't even know that client 3 weeks ago. So I don't know if I'm just I think we can choose, it's either I love Kim, which I know I do, but or
Love to hate me.
I'm a glutton. I'm a glutton for punishment. I just love to be punished, I just need a challenge. It adds a certain spice in life, For some reason, I seem to choose the path that brings a better story. I don't know. I think that's good. I think people should do that, you know?
Absolutely. I think it's great that you guys have the relationship you do, and it works for you guys, and it also works for your clients. So it really is an awesome story. So let's talk second homes more. I know myself fairly young. I'm 40 years old. I've got a family. I'm paying off my primary, go to vacation. I don't want to go to Disneyland. I'm not paying that. I go to the Jersey Shore. I'm looking for something different. Hilton Head, I've been there once or twice, you know, but for me, it'd be nice if I could buy something and go return there, someplace that I love, build an asset while also having a vacation spot. Um, but I've never really looked into it. If I'm being completely honest, I've never looked into what it takes to buy a second home, and maybe part of it is because I just don't know if I can do it. There are a lot of myths around who can afford it. It's not just for the rich, I hear. It's not just for people who are in the C-suite. But maybe you could talk a little bit about that. What are some myths that you always have to debunk or that you find yourself debunking often?
Yeah, first of all, I'd say it sounds like you need to speak with Kim offline. And she'll take you on a tour and no. No, for real though. Um, Listen, at the end of the day, it's just a numbers game. It's simple. We don't need to overcomplicate the mortgage business and the home buying process, right? So, in a couple weeks, I'm closing on a condo overlooking the harbor, not on the beach side. Beautiful, like dock boats out there. It's $300,000, the condo. For that home, you don't need to have a massive amount of money in the bank. And if you're just looking to dip your toes and be a real estate investor and get into buying a home, you can do that with that property. You can do that if you can do that as a DSCR. Again, it's just okay, maybe that house 200, 300,000. If it brings in a couple $1,000s a month, what's the monthly payment? As long as it's 1 to 1, you can own real estate. I mean, you can rent. You can continue to rent your primary resident. Maybe you're not ready to put down a big down payment or a home in New York. Maybe you're not ready to commit to a primary residence. You can continue to rent and buy an investment property and put down a minimal amount of money, 20, 30, 60, 50, $60,000. Own a piece of real estate. At the end of the day, it's been the best vehicle for me and my family. I'm not just saying, like it's not a sales pitch. I am in the spot that I am as a result of owning real estate for a long period of time because as history shows us, it's over time it appreciates. You're going to have your little blips on the radar where you'll have your little down cycles, but generally speaking, we're running out of land, beautiful land near the beach. You can be a big time person and buy something near the beach. I mean, if you buy something oceanfront here in Hilton Head for, I don't know what, Kim, $6-8 million, it's going to cost you 25 million in the Hamptons. So you put it all in perspective. And at low tide, that beach it's a mile long. Like it's gorgeous.
Deep,
You
yeah.
know,
That's awesome.
Well, and they
Um,
generate income. Like you can have an oceanfront. Let's say you paid 6.5 million. Let's say you paid 10 million. It could generate $600,000 a year in rent, in short-term rent. And then that doesn't count the weeks that you're staying on free vacation.
really, wow,
right?
fascinating. So, what are some things that you would mention to people interested in investment, right? So, what are some realistic expectations you'd want to set for them managing the property, cash flow? If you had to give any advice, what would you share with them?
Are you talking to me?
Yeah, sorry, Kim. Yes, that's for you.
No, so that's the first thing. I have people that come down here and I struggle a little bit because I see this valuable investment for them and they want to come down, they want to buy a secondary home. But then you look at lifestyle and you say, okay, well, how long is this going to sit empty? Like, do you realize that this is available to you? And so I try to educate them on the process. Hilton Head is set up with many short-term rental companies that come in and do a very good job, some better than others, and we can talk about the things that drive that once you get into the weeds on it. But they basically are completely turnkey. So you come in and you purchase your house and you get it looking all the way you want, and then you leave, and then these people are the stewards of your property. They market it, they rent it, they vet the people, they carry liability insurance. I mean, you of course carry that as well. But my main goal to tell people, don't get into it to get rich off the rental. Get into it because you like to come to Hilton Head. Maybe you want to offset some of your income because the new tax laws afford short-term rental opportunities that can help you in your job or your income for a yearly basis. But if you come down, I tell people, break even. Vacation for free and break even, because that property is going to go up because we're an island and we're not growing any more land. And exactly like Jon said, you're always going to have dips. But I mean, the 70s were a dip. 2008 was a dip. But I mean, we're still going up, right? So
Sure.
if you start even young enough, here you'll have it paid off in the interim, or it'll gain so much equity that you'll then, like Jon and I were just talking about, you'll get a HELOC and use that to parlay into another property that then pays for itself, right? And because we're a unique market where you can rent 12 months out of the year, you have the best opportunity to break even. And that's all you're looking for. Some years you might be higher, some years you might be lower. If you pay cash, if you carry a mortgage, all those things play into it. But to have all the opportunities that Hilton Head offers and to be able to float that, I look at that as your retirement. That's the safest retirement you could have. 20 years from now, paid off, you're sitting on the beach with your umbrella, sweet tea, and the rent is coming in, right?
Absolutely.
Yeah.
And
And
I'm gonna
I
go ahead, Jon.
let me just say one thing. Also, there's still a lot of opportunities here for places that can be improved on a small level, on a large level. Um, you know, the client that Kim mentioned earlier that's closing today on a sale. I mean, I did her mortgage. It was what'd she pay? 825, I think, not
800,
875,
800
800.
even.
And 800 even. She improved it. I gave her cash from the improvement. She just sold it, like, and I'm actually proof of that too. I it's just
A
great
million two
timing and
two
luck.
five.
Yeah, the opportunities are, you got to look for them a little more, but especially I think Kim could probably speak to, but like the little condos that can be renovated, kitchen, baths, things like that, and you could turn them around, either keep them long term, get more rent, hold them, or parlay that into, taking cash and using it for the next step up, or whatever the case may be. There's still
I tell
plenty of
people,
opportunity.
yeah, don't go into it like a flip. Go into it to improve it and hang on to it and rent it. And then as it appreciates in value, then naturally sell it. I don't think the quick turnaround is something that you necessarily look for. But here people come down and they want it to be turnkey. We sell them furnished, right? You just
Wow.
turn the keys
Yeah.
over and someone can rent it. But if you're willing to change the carpet and the countertops, and we have great vendors down here and contractors, you can really do well in the rental of it and then the resale of it a little bit down the road.
That's a huge point, Mr. Poma. When you go to look for your like you don't want to get your turkey leg at Disney World, and you want to skip the Jersey Shore and come down. If you decide to buy a home, you don't have to buy furniture. I mean, like, it's, for the most part, all of these, that's a feature here. Like, you're pretty much taking over an existing home that was taken care of, well maintained for, and you can do with it what you want.
Wow. Yeah,
You have to
that's
imagine
definitely a change.
there'd be a renter in there and you might close on a day that there's a renter in there, a short-term renter. So it's like a hotel. So you can't really take anything out of it. So you're buying the silverware, the couch, the napkins, the sheets. I mean, you get it all, sometimes whether you want it or not. But we have dumpsters too. So
I was gonna say I'm the
And
type of person
you're
that
also
I
go
might
ahead.
get all that at closing, but I'll probably throw half of it away just because I won't be able to keep it in the house much for too long.
exactly.
You're also getting the full forward looking bookings of the property, the short-term rental bookings in advance, so that's part of the investment.
Yeah, I gotta say, Kim, we'll have to talk because this is really intriguing for me, and like I said, I'm 40 years old. I've got two kids running around. I don't have time to manage a property. I don't need to think about, going online, going on an app, and trying to book this thing. So can you talk real briefly, just because I want to leave some time for questions. But Kim, are you able to talk a little bit about the management companies and what else they're able to do?
Definitely. I have, there's probably 30 around here. I like to work with two. I think that over the years, you recognize that we've become a technology-driven society, and people are going to pick properties based on their Google reviews or the reviews of the guests. Like, would you stay any place that you didn't have reviews? So I have companies that really are sinking dollars into SEO, the search engine optimization. The fact that I can even say that is a miracle. And then also, that are looking for the reviews that are staying. So they definitely um, promote the guests that stay to leave those. And those, you want someone that's going to drive your rentals and care for your property. So the big thing is also when the guest maybe drank too many beers and can't work the code, they're not calling you at 1 o'clock in the morning, they're calling the rental company. If mostly also I want to say in Hilton Head, we are not Myrtle Beach or Fort Lauderdale. This is not people come to spring break. This is where families come. So there's definitely a large level of respect for properties. You have people come here maybe for a bachelor party, but they're coming to golf, because that's what we have here. And so we're not a very hotel driven island. There are a lot of people. I'm sure if you're interested in Hilton Head at all, you've heard of Palmetto Dunes or you've heard of Sea Pines. These are communities that are built on the integration of full-time living and part-time living. You're going into people's homes. I tell them, leave the pictures of your kids up because then they're going to give you respect knowing that they're staying in your home. And so the management companies handle everything, absolutely everything. They even send you your, tax documents at the end of the year, your expenses, your profit and loss, all of it. And it's really nice. They can come in, like, let's say you buy something that's not already on the rental market and the people moved all their things out. There's programs to furnish it. I mean, even in the storeroom, they have bins of all the crate and barrel package of white dishes and white mugs and all of that. They do inventory every week. They check in, check out, all of it, making sure that your property stays in the best condition. Like there are American Express points that you can use, Marriott points that you can use. And to get into these programs that allow those people to come and stay, you have to have an A+ property. So their job is to make sure that your property is just tip top all the time. And if there's a problem, they're going to call you like, hey, the dishwasher broke. Do you want us to fix it? This is how much it's going to cost. And you said, yes, that'll be great. And then it's a headache off your plate, but you're taking care of it. Once a year, they'll say, hey, I think we really need to do a power wash on the whole house and a deep clean. Great, because you're seeing the income flow come in. It's the cost of doing business. You want to take care of it. But it really is ideal for turnkey renting.
That's awesome. And Kim, I gotta say, I really appreciate the insight that you have on these management companies because, as someone who's only thought about it briefly, while you're on vacation, you talk about, oh, it would be nice to own something. You don't think about, well, yeah, the dishes are going to start to look old and you're going to need to replace them. Or people taking silverware, stuff like that. So, having a management company being so thorough, in such a desirable destination is really a burden off of the investor's mind, I guess.
Having so many
So
clients, I've used a lot of them, so I definitely have narrowed it down to some top ones, so it's good.
that's awesome. Just like everything, you got to find the right people to work with, and I think we have two great people here. Real quick, let's just see if before we wrap up, if there are any questions. I'll say it again if I didn't mention it before, but if you have any questions, please enter them in the chat. We'd love to hear if anyone has any comments, questions, any experiences maybe. And while we're waiting for that, give everyone a chance to enter anything. Um, if you had to give one last key takeaway for either investors or people looking to buy a second home, if they could leave this this webinar from one thing, Jon, what would you want to make sure they know?
Not to overcomplicate not to overcomplicate it. I'm always here to help. And I try to, excuse me, I try to use my own, experience. It helps to be someone who's done what people are looking to do. And so, my phone is always on, always. My wife fully understands that now, even when we're on vacations or touring a college with my daughter or whatever. Nobody's going to beat the effort that I have, or I know that Kim has, because it's an exciting thing. Like if you're looking to come down here and get involved in real estate, I truly do enjoy speaking about it, and making sure that I listen. That's the key thing, I think, for any loan officer out there or people. You just really have to listen to the borrower's situation and process that, and really try to do with it as you would for yourself or your own family.
Great. And I do see we have another question coming in. Someone asked, what's the average rate of return on investment? So, Kim, maybe that's a question more directed for you. What should realistically people expect if they were to buy a property and rent it out?
So I mentioned earlier that a lot of it is affected by, are you going to carry a mortgage or are you going to pay cash? And so what are your carrying costs? And so that varies per person. I tell people there's two things you have to consider. You want to, how much are you personally going to use it? Are you, because you could be saying, oh, I want to come and I want to be there over the 4th of July. And I'm like, really? You have to pick the 4th of July? That's your top generating weekend. You're killing me. We also have the Heritage, RBC Heritage. It's a national golf tournament with the PGA. It's here on Hilton Head Island. I'm sure if you're a golf enthusiast in any way, you've seen it. It's a great show of our island, but where you might rent something for $5,000 a week, normally you're getting $20,000 a week. Our high season is summer, and then the winters and shoulder seasons are a little lower. I tell people to go into it not, to break even, to pay all your taxes, pay your insurance, have some free vacations, and then you're earning on the equity. And that has everything to do with my crystal ball, which I'll get out and tell you exactly how much you're going to make. But the market is eventually going up, right? So either it's going up a little or it's going up a lot. And if for any reason it goes down, it's temporary. It's like anything. So my advice is to buy low and sell high, and, make sure that your property is paying for itself. And that's something I usually look at, I want, when all the numbers are crunched, are you getting at least 8%?
8%. It's
Mhm.
great. Good to have that
Can I
guideline.
interrupt for
Appreciate it. Yeah, go
can I
ahead.
interrupt for 1 second? Kim, you're gonna love this. Where are you from originally again? Chicago?
Uh-huh.
I just got this text while I was, I don't know if everybody can see this, but no, probably not.
We can't see.
United Airlines expanding service to Hilton Head Island with direct flights from Chicago.
That's awesome, because the FAA just put $12 million into our little airport here. And we're getting, instead of walking on the tarmac into the terminal, we actually are getting the little skylift thing, that you walk on, to connect to the plane. So big
Yeah,
deal. But it's
more than two gates.
yeah, we have brand new gates going in, and the only bad part is you can't park your car at the gate anymore. That it's like normal airports where they keep you going. But it's
Yeah.
very accessible that we have Savannah and here so close to each other. So that's awesome.
That's awesome. It seems like you guys should be spokespeople for the Hilton Head Island. Seems like you
We're living the
really love it so
dream.
much. That's
We're
awesome.
living the dream.
So I have a question, and actually came through the chat also. My primary house I have here in New York, I have a ton of equity in it that I just haven't tapped because don't want to pay the high rates right now. If I don't have something that's going to give me the return, is there what are some ways that I could leverage the equity that I have in my home right now? And maybe Jon, there's a question for you. I've got this house. I know I have equity in it. I'm interested in a rental property. What's the pathway for me?
Yeah, I mean, for you, you're probably like most Americans, and the rate on your current mortgage is 2 to 3%, I would imagine.
Nailed it.
So I mean, I'm not afraid of home equity lines, even though the rates are higher. You know, we have them, we fund them directly. The process is easy, and we're competitive with them because the client I was talking about before, who we closed the HELOC on Monday, he was teed up to close with another place that I won't mention, and the rate was prime plus, prime plus two, and there were points involved. I mean, with a home equity line of credit, if you take out a couple $100,000 or $100,000, $300,000, whatever it is. I mean, I've had a home equity line since the beginning of time, and I've seen my lines go hit the floor, and I've seen them go really, really high. At the end of the day, it's not the rate sounds a lot worse than the payment actually is if you're utilizing those funds to acquire something for your long-term future. If your rate is in the prime is what, 7.25. If you're borrowing in and around that number, your interest only payment is not terrible. You can keep it close to $1,000, but meanwhile, you've now taken a couple 100,000, and you now own a really great piece of property. You know, so
I think that
that's
goes
my
back
thing.
to, yeah, Leon's question earlier. We really take each property on an individual basis and how you're financing it and what your costs are. And in the end, you want to look, you don't want to buy something and have to keep putting money in every month, right? So you take the interest only rate, you look at what is the HOA, what is the regime. Down here, we have a double layered HOA system depending on where the house is. The regimes cover all your expenses, but when you put regime, meaning insurance, property management, all those kinds of things. So we just add up all the expenses, and sometimes we'll say to you, hey, this house does not make sense to you based on where it is. But this house over here, we know what the cash flow is. We've added it all up. So sometimes the interest, I mean, look, you're not going to pay loan shark rates, but you don't look at just the interest rate and say, oh, okay, that's too high. Well, is it too high? Because if you're going to look at the whole bubble of what's coming in as cash flow and what's going out, also what you're deducting, what you're vacationing for free on, what you're expensing out. Do you have an LLC? Is your week's vacation really, your 40 weeks of work that you work for your LLC? I mean, there's a lot of things that go into picking the right property, and those are the things that we try to help you with.
Awesome.
And
Well,
home equity rates change, and while they were on the rise for a while, they're back trending down gradually. So you're not stuck with that payment. And when things are good, you focus on chipping away at the line that you took out. Maybe you take the cash flow from the fixed rate mortgage that you have on your investment property, and you were plus, you had a great month. Maybe you take that principal and you put it towards your line of credit, reduce that monthly obligation over time. Just keep chipping away over time. I look at it as a forced long-term savings plan. You're you're
Excellent.
you're you're building equity, you're building equity, you're gaining appreciation, you're chipping away at debt. I mean, and it's just great for the future, for long term.
I have one more question before we end this. Did get another one though, and this is actually a really good question because you're on an island. Makes perfect sense, or at least to me, it makes like a possible concern. How difficult is it to do renovations if you're looking to do a fix and flip or a fix and rent? You mentioned that there are some properties that are ripe for improvement, but how difficult is it to get supplies in? Do you have any experience with clients that have dealt with that situation?
I have a lot of experience with that. I have clients that have put $1 million into a house, but it was a $5 million house. They put $1 million in. Now it's worth 9 million. It's not bad. And then their rent carries their debt on it. I have a little condo that they purchased and paid 400,000 for. They did a little bit of work and now they sold it and they made a profit. Again, I'm not big on the flipping, but if the opportunity presents itself, I'll be like, hey, I've got a buyer. They'd love your house. They're exactly what this client that Jon and I just had that took the HELOC out to buy the second house. They paid 800, and a year later they sold it for 1,225,000. So will that happen to everyone? No. Has it happened to other people for even more? Yes, and less. But again, we buy and sell at the right time. We have great contractors, and I have a Lowe's, I have a Home Depot, I have a HomeSense, I have Home Goods, I have a lot of talented contractors. We're not short on that here in every field. So definitely it's the whole package when you're working with me. And Jon has great referrals as well. We
Yeah.
we make sure you're taken care of. Because look, in the end, I don't want you to have a house that you're losing money on in the rental market. So I'm going to make sure that it's doing the best it can. And then also, if we're going to go into something that's a reno, we got to have the right people. So we're going to know what those expenses are going into it. And then also, I just want to say in ending, because Leon had asked this question, you talk about Airbnb, doing Airbnb or VRBO. When you're with these rental companies, you have to understand they're on like 30 platforms, and you start off right off the bat under their moniker. So then you are already platinum status to start. And you also have all the reviews and the website and everything that goes with that. And that's all part of that expense.
That's great information. All right.
Yeah,
So
I was
no, go ahead.
sorry, I was just gonna say, like, I was a guinea pig. I mean, the first house I bought, I renovated, and I've, just from being here, being in the market, being involved in real estate, I definitely have a lot of, I've met the right people that are, that I would use personally, that I would try, in addition to Kim, on the renovation side. One of my best friends moved here from New York. He was looking for houses for a couple of years. He was a COVID guy down here. I met him here actually played tennis, both from New York, and he had to go back to work when things got going again. And for the last couple of years, he's been looking to buy a house. He just couldn't find the right house. He couldn't focus on it, whatever. I introduced him to Kim. Wouldn't you know it, he's buying a house a month later with a new build with a builder who, the guy is really patient, really eager, and does a great job. The product was phenomenal, you know. So
Awesome.
we're learning. I'm Kim knows more than me. She's been here a little longer, but I'm learning all of the tricks of the trade too.
I'm sure you are after 25 years in the business, right? All right.
Don't remind
So
me.
I got So I gotta say, I really enjoyed this conversation. Kim, Jon, I want to thank you for doing this, stepping up and sharing your information, your experience that you have on the second homes and investment properties around Hilton Head. Really appreciate everyone joining this call, and we're looking forward to doing more of these. So thank you again, and everyone have a great day.
It was fun. Thank
Appreciate you
you.
doing this. Thank you.
Have a good one.
All right.
Thank you.